Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look at the coal market. So finally we have got the performance that we discussed through the week and actually waiting for a response of the market to the resistance levels. As we said previously, we haven't got any on the 1950 but around 1989, as we said in the morning yesterday, that it seems that something is going on because market has started showing some signs of weakness around it, and close to the end of the session you could see that some kind of the collapse started. So don't be upset that you haven't missed anything yet. So this market has just started the downward direction, and today we consider what we could do in the current circumstances, because now it becoming evident that we're considering this head and shoulders pattern. So it means that the downward direction target should be somewhere around 1930, maybe slightly higher, where the right arm bottom has to be formed. And that particular the points that bulls should consider, especially for those who are trading on the daily chart and on the weekly chart. That's the level that you're watching for, because overall content stand bullish. For the bears, it's mostly job exists on the lower time frames, on the intraday charts. Yesterday's session had become a reversal one. You can see that market closed barely below the lows of the previous session, creating the new top. So this is good sign for the bit deeper retracement, which is totally agrees with the idea of the head and shoulders. So on the 4 time frame chart, that's I put here some perfect picture that well, we are actually watching for. Of course, market probably will form everything not as perfect as it's shown here, but you got an idea. So this is our big pattern, head and shoulders, right? This is minor reaction starting from the neckline. Take a look that there's no contradiction among the opposite patterns if they are stand on a different time frame. So it's no problems to get simultaneously the reverse head and shoulders on the daily and direct head and shoulders on the 4 time frame chart. As you could see, they are harmonically linked together and absolutely doesn't contradict to each other. So here's actually what bears could keep an eye on. Market now is coming lower. If everything will go as I posed here, so you could see market should reach the neckline around 1950, and there's a pullback and then extension right to the 1930. Let's take a look. Accurately agrees with the lows of the right arm. And here you could decide where you would like to take the position. Actually, there are only two options. First one is to take position on the slope of the head on the minor pullback that might happen in the nearest hours, or do nothing, wait when the market complete the neckline and then take the position on the pullback on the right arm. Actually, you could see that mostly the level will be the same, right? So now market stands mostly at the same points where theoretically right arm could be, but circumstances might be different. So for instance, if you take position here, market indeed will keep going lower. You already will have the most good move stops to the break-even or somewhere, and you will be prepared for possible failure of this head and shoulders and moving upward, for example, because we do not know, anything could happen. From the other point of view, when you're taking position right there, you already have mostly the head and shoulders in place. So this will be evident shape, and it will be a bit less risk with it. This choice is up to you. So if you decide to wait for larger head and shoulders, that's okay. So you could just wait for probably next week when the market will show this pullback. But if you decide to act today on these points, take a look what we have on the hourly chart. This is type of the downside action here. Market's forming bearish reversal swing down, and it's coming to actually some kind of local support here. It's completed the downside butterfly and lower border of this, some kind of the pennant or something, this trend line. So now you could watch for some pullback. Preferably if we will get the pullback somewhere to 1970, now 1971 confluence. So in this case, you could consider this area for a possible taking a short position. But additionally, I would consider 30% support right there. I don't have it on the chart. Occasionally I have that deleted. But it stands right there around 1965. So these two levels, so 1965 and 1970 approximately. And you could split your position if you would like to enter on the short side. Take some part around 1965. If market proceed higher, then you could consider this level for take the second half of your position. And in this case, you will be possessed for possible downward action. So that's the logic of the entry right there on the slope of the head. There's possibly two ways that you could consider right now. That's actually all that we have currently on the gold market. For the bulls, as I said, it's too early to take an action. You need to wait when the market will prepare the background for reversal, the background for possible taking the long position. And finally, you can see divergence here on the fall time frame chart. It suggests that these levels should be taken out. So it just indirectly support the idea of the appearing of the head and shoulders. So that's actually, guys, what we have. Let's see what we will get.